Saudi Arabia, UAE, Qatar, and Kuwait are done paying for a war they never approved. You're being told this war is about missiles. It's not. Because right now something far more dangerous is starting to move, and almost nobody is watching it. America's closest allies, the same countries that fund and stabilize the system, are now quietly preparing to push back. Not with weapons, with money. And if that actually happens, this stops being just a conflict in the region and turns into a fight over who pays for it. There is a part of this conflict unfolding right now that does not fit into the way most people are still looking at it, because most coverage is stuck on the battlefield, missile counts, interceptions, explosions, statements. All of that matters, but it is not the deepest layer of what's happening, because another front has opened, not through troops, not through ships, through capital. And that front may end up shaping this conflict more than anything happening in the air. Saudi Arabia, the UAE, Kuwait, and Qatar, states that have spent decades inside the American system, are now considering something that should not be happening inside a stable alliance. Pulling back from parts of their economic relationship with the United States. Think about what that actually means. These are not adversaries. These are the same countries that host American infrastructure, invest heavily across Western markets, and act as pillars of regional stability. And now they're signaling something very different. The economic side of the alliance is no longer unconditional. That is not routine. That is a shift in how the system itself works. And the reason behind it is simple. They are being forced to absorb costs they did not choose. That is the center of this story. These states did not initiate this conflict. They did not choose its timing. They were not clearly positioned as decision makers in the escalation. But once it began, they became targets anyway. Not because of their own actions, but because of their alignment. Their cities, their infrastructure, their economies became exposed because they are part of a system that made the decision. That distinction matters, because from their perspective, this is not shared strategy. It is imposed exposure. And the scale of what they've had to absorb is not theoretical. Missiles, drones, airspace interceptions, and in some cases, real damage. One of the most important examples is not even military, it's economic. A reported fire at an AWS data center in Dubai. That matters far beyond the physical damage, because infrastructure like that is built on trust. The Gulf has spent years trying to build a new identity, stable, reliable, safe for global business. Now imagine what happens to that image when conflict reaches inside that environment. The problem is no longer just physical, it becomes reputational. And reputational damage spreads across everything. That's the first layer of the problem, direct economic loss. Flights disrupted, tourism impacted, energy systems exposed, trade interrupted. Local disruption quickly becomes global impact. But the second layer is more dangerous, future confidence. Because the Gulf model is not just about present revenue, it's about attracting what comes next. Companies, investors, infrastructure, long-term capital, and all of that depends on one assumption, stability. Once that assumption weakens, the cost doesn't show up immediately, but it builds, because long-term capital does not like uncertainty, and uncertainty has now been introduced. The third layer is the one most people miss entirely, diplomatic architecture. For years, Gulf states worked to build a fragile balance with Iran, not friendship, not alignment, something more practical, managed coexistence, back-channel communication, de-escalation frameworks, careful diplomacy. That took time to build, and it has now been disrupted rapidly by a conflict they did not choose. So from their perspective, they lost revenue, they lost stability, they lost diplomatic positioning, all for a decision they did not control. That's why this is not just frustration, it's structural pressure. Now look at the alliance logic. There has always been an unwritten deal. You host the system, you invest in the relationship, you align strategically, and in return, you get stability. But that equation has changed, because instead of protection, they received exposure. And this is where the miscalculation happens. The assumption has always been that allies will tolerate almost any cost, as long as the security structure remains. But that only works up to a point. Eventually, allies stop asking, "Do we need this system?" and start asking, "How much is this system now costing us?" That is where we are now. And that is what this investment signal represents. Not a break, not a shift in sides, a recalculation, a message. The relationship continues, but the cost is no longer unlimited. And that message is being delivered in the only language that forces attention: money. If the costs continue, they will start pushing those costs back, not with speeches, with capital. Now add the energy layer. The Strait of Hormuz is one of the most critical choke points in the global economy. A huge portion of global oil and LNG flows through it. Disruption there is not regional, it's systemic. Prices react immediately, and that creates a political problem that cannot be hidden. Fuel prices. Because voters don't analyze policy, they feel prices, and that creates pressure. Iran understands this. That's why economically sensitive targets matter more than isolated military ones. A refinery, an airport, a data center. These create ripple effects, and here's how the system now works. Iran creates pressure on Gulf economies. Gulf economies absorb damage. Gulf governments redirect that pressure toward Washington. That is the feedback loop. And the investment signal is how that loop becomes formal. So what happens next? The most likely outcome is not a dramatic break. It's something quieter. Capital slows down. Deals get delayed. Commitments get reconsidered. That alone sends a powerful signal. The alliance is becoming conditional. If it goes further, the effects build. Less capital flowing into American systems. Higher financial pressure over time. Gradual economic consequences. Not immediate, but real. And then there's another layer, China. If Gulf capital starts looking for alternatives, there will be options waiting. Not overnight, but gradually. That's how shifts happen, not in one moment, but in a series of decisions. And this is the bigger issue. Military actions are being treated separately from economic systems. But in a region like this, they are not separate. They are connected. You cannot run a conflict through a region that anchors global energy, capital, and logistics, and expect the consequences to stay contained. They don't. They come back as higher prices, strained alliances, shifting capital flows, new geopolitical openings. That is what is happening here. A military decision created economic consequences. Those consequences hit allies, and now those allies are converting that into leverage. That changes the entire structure of the conflict, because now the question is no longer just, can the operation continue? It becomes, can it continue without breaking the system that supports it? Because if allies are forced to choose between loyalty and self-preservation, that choice doesn't stay flexible forever. It hardens. And once it hardens, the problem changes. It's no longer external pressure. It's internal resistance. And that is far more dangerous. So here is where things stand. The Gulf absorbed real damage. They were exposed to a conflict they didn't initiate. They lost stability, revenue, and diplomatic balance. And now they are signaling something very clear. The cost cannot stay one-sided. They are not walking away. But they are redefining the relationship. They are renegotiating the price. And they are using the one tool that matters most, capital. That is the shift. Not loud, not dramatic, but structural. Because once money becomes part of the pressure system, this is no longer just a military conflict. It becomes a question of cost. And more importantly, who is willing to pay it? Subscribe if you want analysis that goes beyond headlines and connects the full picture, military, economic, and strategic. And before you go, answer this. If allies start pushing back financially, is this still a war, or is it a negotiation over who pays for it?